India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Hello and welcome to Bazaar Morning Call, coming to you live from the CNBC-TV18 and the Motilal Oswal studios here in Mumbai. I'm Lata Mkts and with me is my colleague Surabhi. Yes, we are not triplets in Bazaar, we are only twins, and that explains how much both CNBC-TV18 and the world outside is enjoying the Christmas vacation. I do envy them, but don't grudge their happiness. The city itself was in gay, coloured, well decorated yesterday. It was a sight for sore eyes, lights everywhere. And today, I guess most of you are glued to your TV or your mobiles watching
Cricket?
Boxing Day match.
Absolutely. So I think most, those who are in office and of course are trading, they will be toggling between what's happening in the market and, of course, what's happening on the pitch out there in Australia. But, of course, season's greetings to everybody and a Merry Christmas to all our viewers. Hope you had a fantastic midweek break in the midweek holiday. But I thought for the markets as well, right? So many markets have been quiet. Many in Asia are actually closed for the Boxing Day holiday. So thank you.
Yes, I know. Sensible people do close when the market is not in a mood to trade. But what do we have for us in terms of cues? The US indexes ended at, with 1% gains, as you can see, nearly 1% for the Dow, and repeat performance on the Nasdaq. 2 days on the trot, the Nasdaq has done very well. But will it rub off on Indian stocks? My sense is no. This is continuing what you call US exceptionalism, with money getting attracted there. And I'll tell you why in a minute. See, the Indian FPI sales itself was 2,400 crores on Tuesday, on a day when you saw the market rise and give back all its gains because there was selling. Now, why is there so much selling even though the US is doing well? It's largely because the other indexes or other parameters are indicating that it makes a lot of sense to be in dollars. The US bond in 10-year Treasury bond yields were up at 4.6%. Now, this is risk-free yield. You're holding dollars and you're getting a 4.6% yield, plus dollar index itself has risen and remains above the 108 mark. We saw a brief blip last weekend of about 107.6, but it's gone over 108. So it makes every sense to hold it. And as the dollar rises, the rupee has on Tuesday seen a new low of 85.2, almost. It doesn't make sense to be in a currency, hold its shares when the currency also depletes as well. You're not getting that much of gains on the share market. The US markets, the mother market, is getting it right everywhere. It's getting right in bond yields. It's getting it right on the strength of the currency. It's getting it right in equity returns as well. So one shouldn't expect much. I just want to add a bit of negative news that came in. For those of us who read this very closely, the Reserve Bank's bulletin, December bulletin, every bulletin has a chapter called the State of the Economy. And there quietly, the Reserve Bank has further lowered its growth forecast. For the current quarter, it remains at 6.8. They had lowered it from 7.4 in the monetary policy itself. But they had kept a 7.2% for Q4. That has now been lowered to 6.5%. So that is a kind of a reality check. Now the average over the 4 quarters comes to 6.4. In the December monetary policy, they had set 6.6, which means in a matter of 3 weeks, the Reserve Bank has lost its confidence that the growth can be above 6.5%. Well, this can be read as a hint for rate cut, but really, that's the negative. I just want to add one more point. Surabhi, today's expiry day, the Nifty expiry day. And chances are that it started off at 23,914, I think. So people will try and push it to that level simply because, there isn't FII, there isn't the other party to give, to take away the money. So it's possible that you'll be able to see this engineering. And I think this engineering of stock prices I don't want to call it manipulation, I'll call it management of stock price, may continue on 30th and 31st because that will help NAV management. So we may see green days, but let's not run away. That represents growth.
We have to, I think, wait for the market to come back in its entirety, 2nd January onwards, really. Basically after the first week of January to get a full trend. But in any case, when we will make do with the cues that we have for now. And the ones that are coming in from Asia actually are not too bad. They're taking that positive handover from Wall Street. And many of the markets that are open, they're managing some gains as well. Some like Australia, New Zealand are still shut. I think even Hang Seng, the trading hours are limited and restricted. So the cues are largely positive. Now, out of China and Japan, there's some news points over the holiday and today. So I thought I'll put that on the table. In Japan, the talk is about the budget. Their fiscal year also starts in April. And for that fiscal year, the budget is going to be a record 735 billion. So the Japanese are also spending more. They want to sort of service their debt, and they're looking at more social security programs, which is, of course, something that that economy and that country needs given the age demographic. So that's Japan in news. The market's taking it quite well. The Nikkei has been up and about. So it's not a shocker in terms of how the government is looking at its budget for next year. China has announced more property market measures. They've been doing that through the year, right? And there were more announcements on Christmas Day as well. Now, what is China looking to do? They're saying that we will expand the urban village renovation program. They were looking at 1 million units. Now they'll do a little more. And they will look at tighter control of supply in the commercial housing space as well. So looking at managing commercial supply and prices. What a lot of these measures have done is that the pace at which home prices have been falling, property prices have been falling in China, that has reduced. In November, the pace of that fall came down even more, but there's still contraction. Anyway, from a stock market perspective, this is not what the stock market is waiting for. The stock market's looking for that helicopter money for big monetary announcements or a massive fiscal announcement coming through, which will only happen next year after the Lunar New Year break, somewhere closer to March. But for what it's worth, that's the China news flow today. Now, like Lata was saying, the fact is that the Indian market has not been able to even hold on to Santa. I remember Nigel saying before he went on his break, Santa comes, the problem is he dashes out of the door very quickly. Even if you get that opening green, which is what was happening on Monday and Tuesday, you might start slightly positive with these cues, but then you sell down through the course of the day, and Tuesday saw that happen again. Tuesday was the second day that the market could not conquer the 200 DMA. It kind of went to that mark and then slipped again, which is a sign of intrinsic weakness that's coming through the market. That level is around 23,841. Considering that cues are even thinner today, will the bulls get adventurous? And will you see some pops here and there on individual shares? Let's see. But again, the FPI is selling. Even I was, Lata, quite surprised to see such a big sell number on Tuesday.
We thought it was thin trading.
Exactly. We thought, FPIs will not be around. They would have left for Christmas, but again, they managed to sell over 2,000 crores. Anyway, from a stock perspective or a sector perspective, the sector I'll watch out for today is going to be the capital market space because of the news that we got over the weekend. The parent company of Grow, the investment arm of Zerodha, and a couple of other investors, all of them put together, have pumped in about 238 million in the Metropolitan Stock Exchange, which is interesting. We know what's been happening to capital market stocks in any case, stocks like BSE, a lot of the broking stocks as well. It's a very red-hot part of the market. It's expected to, of course, compound at a very healthy clip over the next many years, not just today. But anyway, these stocks have also run up. However, there's this big announcement, and the people who are investing, they're existing capital market players, Grow, Zerodha, and a company called Share India, which is already listed. They're also looking at capital market, technology, services, etc. So watch this space. Let's see if there's any more excitement. And as I say that, by the way, we will be speaking with the officials in the management from Motilal Oswal. That's one of the best performing stocks of the year. So we're covering the capital market theme a little after market open. So keep it, keep tuned in because you'll hear more on this. Promises to be quite an interesting space to watch today and going over the next couple of days.
Oh, absolutely. Capital markets stocks, related stocks have done very well. Among the big gainers is also KFin.
Yeah.
Just perhaps share transfers is what they do, more depository participant. But, they've all been doing extremely well. But let's